Hey, what is happening, Bulls and Bears? We are back, and it's been a few days. I have to count the number of days. I haven't taken this many days off in a long time. Actually, wasn't feeling too well up until today. But before that, we had some family events and situation we had to take care of. So part of it wasn't feeling too well, kind of burned out, tired. The other part of it was just family stuff. Trying to get back on track here and refocus and want to have our eye more on real world solutions. Of course, reporting the economic news, giving you the economic reality or daily dose of economic reality. That is, if I can put videos out every day. Economic reality to help us prepare for what is ahead. And what I think is ahead is definitely a big drop in our standard of living. And I would call this the calm before the drop. Now, if you look back over my videos over the past few years, I've said kind of the opposite. I said it's going to be rising prices, um, just huge levels of debt piled on top of debt. Now we have this unlimited debt ceiling. Basically, they didn't just raise the debt by a given amount. So they didn't say, "Oh, let's raise it by 4,000 or 4 trillion or 5 trillion." They didn't even put a number on it. They put a time on it. So it's suspended until the beginning of 2025, um, until basically the end of the current administration's tenure. And we'll see what happens, with November 2024, who gets picked. But this gives them basically unlimited spending power. Now, they're out there saying they're going to limit spending in certain areas and they're going to cut back on certain things. But when you don't have an actual given number, folks, it's unlimited. So they can really throw money at this thing. And how's that going to help or hurt us? Well, it's going to hurt us in this way. It's going to cause more inflation, or it's going to prevent deflation. We're talking about the cost of living not coming down. Normally, that wouldn't be a big deal, wouldn't be a problem if wages were increasing. But, folks, wages are not increasing with the rising costs. But let's go through some of the latest news here. Blowout jobs number. The May jobs report shocks economists. The strongest employment report. Data from the Bureau of Labor Statistics out Friday showed that there were 339,000 jobs created in May. That seems pretty good, right? Until you see the almost 1 million unemployment claims, right? Remember, it's almost 250,000 every week. Add them up, it's a million. What happens is when somebody gets laid off, gets a different job, they'll count it as a job added. In the meantime, we have more people dropping out of the labor force. Yes, things are good on the surface if you just read the headlines, but behind the scenes, things are not very good at all. And when you have this many people dropping out of the labor force, you have that much less spending in the economy. Now, you say, well, why do the banks report that spending has increased? Well, spending has increased for the people that are spending because the cost of living is so much higher. But now we're seeing people in the upper tiers of incomes, even 100,000 plus, 150,000, 200,000, 200,000 plus income earners. We're talking about annual income now, unable to pay off their credit cards in full each month, and you see the debt climbing even for those higher income groups. And we've talked about that here before in this channel. We've showed you the charts on it here. So things are still trending in the wrong direction. And think about this. We've only had this credit crunch happening for a little more than 2 months. Remember the big bank failures that started off in March? We were only, 3 months, coming up on 3 months since that time. So we haven't felt the effect in the economy of those bank failures, which led to, they have led to tighter lending standards. And what happens when people have a more difficult time borrowing money? When less people are borrowing money and buying things, prices come down. So we're going to see some price drops, even bigger than we've seen so far. We're going to see more real estate price drops and corrections. We're going to see more automobile price drops and corrections. Hopefully, the falling prices will be more significant than the prices that are still elevated and rising to help people get through this. Without some deflation, it's going to be very, very difficult for most people to keep going without going into the bankruptcy line. Now, let's talk about that real quick. I got another email from my friend, Richard, who says that I'm wrong about everything. Everything I'm just making up. It's all fake. The economy's fine. Nothing's wrong with the economy. I'm not the one saying something's wrong with the economy. I'm just giving you the numbers and the data, and the data speaks for itself. So when you have 250,000 nearly every week unemployed, that's about $1 million a month. Compare that to the jobs added number. Again, 339,000 jobs added in the whole month of May. Just do the math, right? You don't need to have me tell you that it's not good when all you have to do is look at the numbers. So anyway, Richard in his email says that I'm wrong, that he went to SeaWorld. That's right here in San Diego. It's kind of scary that he's in San Diego. He might see me out somewhere and maybe, maybe try to drop something on my head. I don't know. He seems to have a severe dislike for me. But yet he comes back to the channel and watches the episodes and then sends me emails about how I'm wrong. So Richard's latest email basically says this. He was at SeaWorld and there's no recession because every adult at SeaWorld had a $25 beer in their hand. Wait, every adult at SeaWorld? I've been to SeaWorld a few times and I might see a few people with a beer in their hand, but he says every adult, that's a quote, every adult at SeaWorld had a $25 beer in their hand. Okay. Beer doesn't cost $25 at SeaWorld. I don't drink beer and I haven't bought it, but I can tell you there's no way they're going to charge $25 for beer. Even a baseball game, which is ridiculous prices, I don't think they charge $25 for beer. I haven't been to a baseball game in years. I haven't been to a sporting event in years. Please let me know what you think down in the comments. Is he lying about the $25 beers and about every adult having a beer in their hand at SeaWorld? So that's his theory, is that all these people have $25 beers, so therefore there's no recession because they can afford the beers. I guess all we need to do is I'll just wait for emails from Richard, and he'll tell us how many people are holding beers wherever he goes, and then we'll use that as a gauge for the economy. Haha, right? All right, crazy. Let me know what you think down in the comments. Jobs report added 339,000 jobs in May, crushing expectations. Folks, are these good jobs? Well, let's see. If these are great jobs, we should see news articles saying that people are paying off their debt. Credit card debt is dropping. People are paying off their student loans. So let's see if we can find any news telling us about how the debt is getting paid off and everyone's debt is dropping. Yahoo Finance. Americans' credit card debt hits towering height of $1 trillion. Oh my goodness. Payments.com. Credit card debt hits $1 trillion amid nonstop spending. Consumer debt, this is the total debt, not just credit card. Consumer debt passes $17 trillion for the first time despite slide in mortgage demand. That's CNBC. Well, looks like these jobs aren't that good if debt is still climbing. If the jobs are good, folks, wouldn't people be paying off their debt? Especially at these high interest rates. Who wouldn't want to pay off their credit card when you have an interest rate that's 20+%? Folks, this can't last much longer. I told you at the end of last year that 2023 was going to be the year that it all comes down. But now we have this unlimited debt ceiling for the next nearly 2 years. What can they do? What can they do to keep kicking the can down the road, to keep this propped up? Well, think about this. The banks that are pulling back on lending, now if they have unlimited debt capabilities, then they could keep the money flowing, so to speak. They can tell these banks to keep lending, and then they'll just be backstopped by just new spending bills. Maybe they'll pump money into the banks straight out of the central bank. Who knows what they'll do? I'm not saying they're going to do that. I'm just saying that a lot of strange things can come out of this when you have unlimited debt capabilities. I don't think that's going to happen. I think we're still going to see deflation because of the lending is going to stay tight. But I'm just saying look out, because a lot of weird things can come out of this unlimited debt situation here. First quarter mortgage lending falls to 20-year low. First quarter 2023, folks, we're going to see a lot of people dropping out of the real estate industry. Everything you can think of in real estate. The agents, of course, we already reported how many agents are dropping out, letting their licenses expire. The loan officers, the appraisers, the underwriters, the people working at the title companies, even insurance companies are laying off. We talked about USAA. They're also in finance, but USAA is laying off a lot of people. The real estate slowdown, we haven't even seen the full impact of this yet because the first quarter was the 20-year low. And, we're only a couple months since that time. And are these people going out and getting jobs that paid that well compared to what they used to make? I don't think so. And that's why you're going to see debt continue to explode. Bankruptcies are going to start surging once again. And it's going to be a lot of fun to watch. Walmart closes more locations as dollar stores grow higher in demand. We talked about the Dollar Tree. A lot more people shopping at Dollar Tree, but a lot more people stealing at Dollar Tree. So they're talking about raising their price again, higher than $1.25. So the drop off in demand, though, from Walmart and also higher thefts is causing stores to close. Walmart announced plans to close more than 20 stores nationwide in 2023. So a combination of rising theft, more consumers being tapped out, and more people shopping at dollar stores instead of Walmart. Pretty sad times, folks. Let's talk about Target again here. The Rainbow line of clothing have now caused the stock for Target to drop the longest losing streak. They have the longest losing streak, rather, in 23 years. So people are really pushing back on the Rainbow line of clothing. We see the stock did go up on the last trading day, which was Friday. Closed the day at about $133. Remember, the peak for Target was back in late 2021, where it was about $260. So we're right about half of the peak, and people think that everything's fine. People that bought in at the top of that stock are down 50%. But yet people still think that everything's fine, that nothing's wrong with the economy. Another article here, U.S. banks report biggest capital outflows in 40 years. Again, this just started in March. It's going to be a few more months before we see the full effect of this. The banks are going to continue to tighten their lending. Deposit losses topped $470 billion in the first quarter of 2023, according to FDIC. What does this mean? More tightening on the lending. And it's very strange right now in the real estate industry, the real estate market. We're seeing ultra low inventory, right? There's not this big surge in inventory that we usually see in the spring going into the summer. So what's happening? Home sellers are sitting tight. Here's my theory behind it: because rents are so much higher. Rents are so much higher than they were in the past. In the 2008 housing bubble bust, a lot of people got foreclosed, yes, but also a lot of people started selling their home when they saw the market drop, and they went to rent because rent was so much cheaper than owning. And even if it's not a lot cheaper, even if it's a little cheaper, you can sell your home, take that equity, put it in your checking account. Now people are like, okay, do I sell my home and have a bunch of equity sitting in a bank that I don't trust? So another incentive not to sell, right? Who wants to sell their home that maybe in California or some other high-priced area and have hundreds of thousands of dollars of equity, and now you have that cash? What are you going to do with it? You're going to put it in a bank that's going to fail? Am I going to go put it in a too-big-to-fail bank? So that's just one other piece of the puzzle that I don't really see anyone else talking about, but also the high rents are a big part of it. I wouldn't want to sell my home right now because I'd have to go rent a similar property because I still have kids at home and stuff. I'd have to go rent a similar property. It's going to be close to $3,000 a month just to rent here in San Diego. And I know some of you are going to say, what are you still doing in California? I'm going to continue to pay the sunshine tax. I've got family here. I've got business here. I've got friends, community, etc. Can't just pack up and leave when you have something like that. If you're a single person, retired, kids are out of the house or whatever, maybe you never had kids, then it's much easier. I would probably live in a camper or something like that if that was my situation. If it was just me, I would probably live as cheap as possible. I'd be one of these people by choice living in a camper because, I just don't like paying all these. I don't like paying utilities. I mean, who likes paying them? But I can live without a lot of what I call luxuries. I can live without heating and air conditioning. I can buy a van and go park it down by the river or by the ocean where it's nice and cool on the hot days. You know what I'm talking about. So I could get by on my own, very easy. But when you have a family, you have to do what the family wants, right? So you have to have the heat on, you have to have the air conditioning on, you have to have a big house, you have to have a backyard. You don't have to, but most kids and you know, wives and kids, they want those things. All right, I digress. Kind of getting off getting off on a tangent here a little bit, folks. So I'm glad to be back. Thanks everybody for being here. I'm gonna go ahead and wrap this up. Probably hear it in my voice. I'm not back to 100% yet. Now, some of you are asking, JJ, why do you get sick so much? I'm telling you what, when you have kids in school, they're around other snotty nosed kids. They bring home germs. And in my case, I don't get as much sleep as I need to. So my immune system's not what it should be. Combine that with the snotty nosed kids. And that's why I think I get sick kind of often, right? It seems like every month I'm like, oh, I got sick and had to take a day off. So feeling better. Thanks for being here. Thanks for your support. Let me know what you think about the $25 beers. Is that what we should use as a gauge for the economy? Um, is he lying? Are the beers not $25? I haven't been to SeaWorld in a while. Please let me know what you think. I don't think they're $25. And I know that every adult in SeaWorld didn't have a beer because not that many people drink beer, especially now with the boycott. I'm not sure if they sell Bud Light there at SeaWorld, but very surprised that someone would want to use that as a gauge of the economy. But hey, I'll let you know about my detractors and people trying to debunk, what we're uncovering here with the economy. And the truth, though. You know what's really happening. So we're going to be on top of the game, folks. Keep stacking. Big love. Bye for now. Talk to you later.